Good morning, this is the latest market news. I am Uliana. Asian markets were trading mostly higher Friday ahead of China's inflation numbers, while Japan moved further away from the multi-year high it reached earlier in the week. Japanese stocks retreated for a second session, with the Nikkei stock average down 1.1% as the market continued to retreat from the multi-year high reached after a dramatic day of trading on Wednesday, when the local benchmark soared 3.8%. Friday was the last day of trading ahead of the Lunar New Year, which includes long public holidays in some of Asia's largest markets. Exchanges in mainland China and Taiwan will be closed for the holiday all of the next week, while stocks in Hong Kong will resume trade on February 14. The yen strengthened slightly against the dollar, with the greenback last at 93.30. The euro's advance was halted overnight, falling by its largest amount against the dollar since July. As was widely expected, the European Central Bank left the official cash rate on hold, with the main catalyst for the move lower being triggered by comments from ECB President Mario Draghi that the recent strength of the currency creates a serious concern that inflation will slow. Surprising many by his direct reference to the currency, the shared unit has gained close to 7% over the past 6 months. Moving from a high of 1.3576, the euro opens weaker this morning at 1.3397. Yesterday's bombs from the European Central Bank and Bank of England will be further analyzed today. The conclusions will drive today's markets, although the US trade balance could be an event. US December international trade. The trade deficit of goods and services is expected to decrease to $45.5 billion from November's 48.7. In November, the trade deficit increased way beyond the consensus estimate of $41 billion. A breakdown of the figures showed that lack of export growth and increase in non-oil imports was the cause. Basically, the euro crisis is hurting American exporters, and American imports from China have continued at a brisk pace. It was the latest market news provided by ICO FX. Goodbye.